Skyrocketing commodity prices drive panic. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. I want to have a look at this article from news.com.au discussing skyrocketing global prices. Let's jump over to trading economics first and have a look at some of the current prices. We can see wheat is at $11.45. It's shot up to the moon. Soybeans, they've shot up. Let's have a look at 25 years, see where they're going. There you go. So, yeah, they've gone up, particularly from, October or May in 2020. We were hitting all-time high territory again. Coal, they $418, guys. I remember back around here, when it was approaching 150. I remember because we were working on coal mines back then, and you'd see the camps that were designed for these coal workers were like very luxurious. And then all of a sudden coal started going down. And you started to, double stack them and experiment with all these things to keep prices down. But there you go. Coal to the moon, everyone. Forget your Bitcoin. Invest in coal chunks. Where's my piece of coal that I got here? Put it away. There you go. Steel. Let's look at steel. 5,100. Yeah, let's look at all-time data. It hasn't, not going as hot, but it's going up again. Iron ore. The backbone of the Australian economy, $156. We're not at the 2021 highs, but we're not at the lows. Remember, the Australian economy, our government anticipates $50 USD for the price of iron ore. Have a look at this one. This is a chart from Western Australia. It shows you how much of their revenue, the West Australian government, comes from iron ore. 24%. And West Australia is our iron ore mine for Australia. And, there's talk about, Chinese economic growth higher than anticipated. Their targets. Are we going to get saved again by China's economic growth? Is that going to save Australia? We don't stuff up our relationship. Lumber. There you go. It's gone up to $14.52. Let's go to 25 years to see there. We're skyrocketing right again. So it crashed right down. I mean, this feels like a crypto bloody chart. It's moving so much. Gasoline, Joe Biden's favorite. I saw a clip where people are sticking this is Biden's fault stickers on the petrol pumps, and the poor petrol attendants have to remove 20 of these bloody stickers every day. There you go, everyone. It's just, that's it. It's going nuts. Natural gas, it's gone up a little bit, not at all-time highs, not by a long shot. And good old crude oil, there you go. Remember when it was negative? Guys, remember when crude oil was negative? Let's jump back and have a look at this article now. So panic mode, skyrocketing global prices. The prices of commodities are rising sharply as the world reacts to Russia's invasion of Ukraine. And Australia could benefit. There you go. There you go, everyone. We've seen it before. More and more calls of these countries diversifying away from Russian natural exports. And their economy is about the same size of Australia, but their economic complexity is a lot higher. Funny that. Australia is set to cash in on skyrocketing commodity prices after crippling sanctions were imposed on Russia. International demand for Australian commodities could double due to the conflict in the Ukraine. Futures pricing for a ton of coal is lifted by 40% to US $440, almost doubling the price since Friday. Buyers in Europe, Japan, South Korea, and China are scrambling to address their exposure to Russian coal, and there are major concerns about supply. Russian metallurgical coal producer KRU has already declared a force majeure for cargoes to Western Russian ports over railway issues. There are rumors other Russian coal producers may declare force majeure on shipments, Mining.com reports. The price of copper has hit an all-time high, approaching $13,600 a ton. The price of nickel is also shooting up. I noticed that when I took copper to the scrappies, everyone. That could open the door for Aussie miners, with Australia's copper exports already growing to $10.4 billion in 2020. Well, there's a question for you guys. I've got no exposure to copper mines. Well, not directly. Maybe that, let us know in the comments your favorite copper mines to invest in the ASX. We'll have to check it out. Russia is not a major copper producer, but the war has made the market skittish. The market is in panic mode in terms of supply. Tea commodity analyst Claudio Torliza said. The price of gold and crude oil have also jumped sharply. Australian exports to boom. NAB economist Tyler Nugent said the price movements were pointing to a 30% jump in Australian export earnings in March. He told The Australian, if the gains were sustained, monthly coal exports could double by their current level in April or May. Okay, now we're looking at other articles discussing potential property price falls around Australia. Big falls in Sydney and Melbourne. And now we've got other ones talking about a potential natural resource boom. What does a booming resource sector do to our property sector? What do you think people working in this sector spend their money on? What does anyone in Australia spend their money on, guys? They're not buying Bitcoin and gold, not normies. Just last week, reports emerged that the European conflict could be the trigger for stalling LNG projects to come back on the table. Multiple major oil and gas companies have decided to pull out of Russia due to the conflict and sanctions imposed by Western nations. And Australia's industry could be primed to deliver in its place. Europe's gas markets are struggling after the suspension of Nord Stream 2 pipeline from Russia to Western Europe. Meanwhile, customers of Russia's Gazprom face a potential major disruption to supplies. Well, it's almost like maybe these European countries shouldn't have been dependent on foreign sources for their energy needs. Maybe why don't they just make a sacrifice to Greta so the wind blows more, so their windmills make more power? Can't you do that? I don't understand. What you're saying? It's not an actual religion. It's just bullshit. Oh, damn. Sanctions from the UK government to Russian shipping industry are expected to further ratchet up delivery costs of gas. The soaring price of gas is expected to reopen stalled conversations around Woodside's Browse venture off the Kimberley coast in Western Australia and its Sunrise project in Timor-Leste. The Sunrise operation has been stalled for years due to disagreements on how the resource will be developed. LNG and coal exports have come under fire in Australia in recent years to the impact those operations have on the environment and the climate. Higher commodity prices will increase the cost of producing goods and could supercharge inflationary pressures. So we could be seeing global inflation that could have an impact on many countries. Let's have a look. I want to just draw your attention to the Observatory of Economic Complexity here, and this is showing you Australia, and our complexity is 79th in the world. Our biggest export is iron ore and then coal briquettes. Now, what I want to show you is this chart here. So we could be doing real well with all of our imports as demand goes for these increases. That could put more demand for the Australian dollar. But then all of our imports could go up. So what you want to hope is that the demand for the Australian dollar to buy our imports pushes that higher to offset the cost of inflation of all of these goods and services. I don't know if it's going to happen. I don't think it'll even out. I think in the long run, the average punter will be in trouble. But those with exposure to these industries that are going to have increased demand, well, they'll be doing well. And I wonder how that's going to play out on the property sector. Let's have a talk about all of this. Really, guys, it looks like Australia's probably going to be saved by this global conflict and international demand for our natural resources once again. Just wait and see. It's going to be the GFC all over again. It wasn't the building education revolution. It wasn't the free money that Rudd handed out. That didn't save us. It was international demand for our commodities, goods and services, and then tourism coming afterwards. We'll have to see if it repeats again. And, we're going to have these two narratives going on. We've got one that seems to be appearing in the media about housing falling because Sydney went down 0.1%. And now we've got another one emerging that the global demand for our natural resources is kind of throwing all the rhetoric about China and other countries not wanting stuff from Australia out the window. So what do you reckon, everyone? Is Australia the lucky country? Have we been saved once again? Let me know your thoughts on this one in the comments below. It's certainly one to watch. And, bugger. I mean, we're going to cop it next time you go to Bunnings. At the checkout, everyone's a globalist, guys. Just remember that. It's all bullshit, whatever people say. They want the cheapest stuff. Anyway, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments. If you're a fan and enjoy the content I find and put together here, there are a few ways you can help out. You can join us on YouTube or Patreon. Sign up for SelfWealth or Stake. Use our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. Take care, guys. Have a great day today. And check out this video about the flooding in Queensland and New South Wales exacerbating our rental crisis. Even though housing stress or mortgage stress is going down, rental stress is going up. It's getting worse. And this is just going to exacerbate it. Take care, guys, and I'll see you next episode. Bye for now.